Ladies and gentlemen, I welcome you all to the Q2 and H1 FY25 post-earnings conference call of Royal Orchid Hotels Limited. Today on the call from the management team, we have with us Mr. Chandra Balji, Chairman and Managing Director, Mr. Arjun Balji, President, Mr. Keshav Balji, Non-Executive Director, Mr. Philip Logan, Chief Operating Officer, and Mr. Amit Jaiswal, Chief Financial Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to detail us about the business and performance highlights for the quarter that went by and their growth plans and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Good evening and warm welcome to everyone. Thank you for joining us for the Royal Orchid Hotels Limited earnings conference call for the second quarter and H1 results for the financial year 24-25. Please note that Q2 results, press release and investor presentations are available on the exchanges. I hope you have got the opportunity to browse through the highlights of the performance. In this quarter, we have seen the business disruption like heavy rains, which did affect the business adversely to some extent. However, we continued to do well. In the second quarter, we've added 2 hotels with 91 keys. The company is growing and with its strong business model and effective risk mitigation strategy. We are working to post better margins in the coming quarter than what the company has witnessed in the recent past. Financial highlights of the company for the second quarter 24-25 on the standalone basis are as follows. Standalone income for second quarter of 24-25 was 51.94 crores as compared to 45.50 crores in 23-24, a growth of 14%. Standalone EBITDA for second quarter 24-25 was 16.02 crores as compared to 14.02 crores in 23-24, a growth of 14%. Standalone PAT before exceptional items for second quarter of 24-25 stood at 6.2 crores as compared to 4.94 crores, a growth of 26%. Consolidated income for second quarter of 24-25 was 78.32 crores as compared to 70.07 crores in 23-24, a growth of 12%. Consolidated EBITDA for second quarter of 24-25 was 19.36 crores as compared to 18.94 crores in 23-24, a growth of 2%. Consolidated PAT for the second quarter of 24-25 was flat at 7.26 crores as compared to 7.21 crores in 23-24. Before I go to explain the performance of the company, I would like to state that the company EPS remains strong at 2.73 rupees per share for the quarter as against 2.49 per share in the same quarter last year. We are working at a fast pace to complete our 300-room hotel in Mumbai, and hopefully we should be able to start operation towards the end of the current financial year. Now I understand that you must be thinking that however the consolidated income of the company has grown 12%, but why the consolidated EBITDA has grown only by 2% and the PAT has remained flat as compared to the quarter of the last financial year. The primary reason for the same was the result of Ind AS. We have uploaded in our investors presentation the results with Ind AS and without Ind AS. A perusal of the same will reveal that without Ind AS, our PAT for the quarter would have been 8.72 crores instead of 7.52 crores as reported by us. These Ind AS adjustments need to be done as per accounting standards. However, they are not cash in nature and you will find the company has got very healthy cash profits. As you see, the company is growing and has to support the growth of the company was required to increase this bandwidth of operation, for which it was required to increase its workforce in different regions, which the company did. The cost of the above started immediately, where revenue of the same will come in times to come. For this, the company incurred additional cost of more than 66 lakhs as compared to last year this quarter. This is a prime reason for cost escalation, which could be seen as investment for the future growth. We are refurbishing some of our assets, which started last year, but because it's being done in the operating household, it could be done slowly without shutting the hotel. The same resulted in increase in repair and maintenance costs by 1.28 crore, but the same was necessary to remain in competition. We launched a new loyalty program for the guests. We have incurred a one-time expense of 57 lakhs for the same. The management has set out a strategy to diversify its product offering, provide unique customer experience, and work toward a robust balance sheet. I would like to conclude my opening remarks by saying that our company is doing well, and in the long run, we will be a company to reckon with. We are also looking to get new hotels under revenue share model as well as under management route. We have a strong capital goods deployment strategy, which will make our company very strong, and we will produce good financial results as we move forward ahead during the current financial year. Thank you now, and we can throw the floor open for questions.
Thank you. Anybody who wishes to ask a question may use the option of raise hand. Alternatively, you may also drop a message on the chat and we'll invite you to ask the question. So the first question in the chat window is basically we would like to know more about your new five-star brand and what is the development with respect to the project upcoming in Mumbai.
I'll ask Arjun to answer this question.
So hi, good afternoon, everyone. The project is well underway. It's close to 300 rooms, multiple F&B offerings. By the end of December, most of the hotel will be ready. We're in the middle of applying for all the licenses, and as you know, this is currently there's elections going on in Mumbai, and files are obviously slow to be approved. So we hope by the first or second week of December, we should have the first of the licenses ready. And then in January to, let's say by the end of February, we should have the project ready along with the operating licenses in place. The hotel is very different to what we currently have in terms of the room design or the service experience, the guest, the kind of amenities that it would have. And hence it was necessary to create an upscale lifestyle offering. We don't call it luxury, we don't call it 5 stars, upscale lifestyle. And this would be the first of many in our portfolio that we would then eventually end up rolling out.
Thank you. We'll take the next question from Anil Kataria. Anil, you can unmute and go ahead, please.
Yeah. My first question is regarding the operating EBITDA, because if you find the consolidated, if you remove the other income, then the operating EBITDA is significantly lower. Because operating other income is only a one-time item. So consolidated EBITDA for this quarter is about 4.5 crores lower than the last year. It may be because the reasons explained that employee cost is higher and other expenses because of the refurbishment cost. But this sort of flattish sort of trend is continuing for many quarters. So that is why it has resulted into a lower earning multiple for our company. And I was given to understand that in the last con call that we were given to understand that probably by 26 we would get into a different league of 100 crore of PAT and all. So I just want to understand, are we on track to achieve that sort of bottom line by 2026?
Yeah, Mr. Kataria, your your question is well phrased. See, as Mr. Baji gave the explanation, certain cost has gone up, which is around 2.5 crore, 2.6 crore. Okay. Apart from that, the India's effect also is there. Roughly around 2 crores is the India's effect, which gets our EBITDA down. Okay. So all these things put together, but but you are pointing a right thing that the growth we are not able to see in the EBITDA as such. The very basic reason is this, that we are looking forward to a phenomenal increase in the revenues in next couple of years, next year and post that. So we have to increase our bandwidth from now. It cannot happen overnight. So probably because of that, a certain cost which has gone up actually, which has started going up from now. But yeah, we are in line with what we have said for 2026 and 27. I think it is definitely doable. We will be overachieving that.
Okay. Good luck.
Thank you.
Thanks, Anil. We'll take the next question from the line of Piyush Patel. Piyush, you can go ahead.
Hello, sir. Thank you for the opportunity. Can you share reasons for the softer average occupancy?
Yeah. Hi, good afternoon. A couple of reasons. Royal Orchid Central, we're pivoting from what has been a volume-led previous strategy on rate and moving rate in Royal Orchid Central. Previous market was largely farmer-driven and group, and MG Road we're refurbishing slowly and upgrading, and we're moving our rate to an FIT rate. So that's in line with lifting based on investment. In Royal Orchid Bangalore, we're also in the middle of refurbishment plans and actually refurbishing, and we're moving our product to an FIT, much more upmarket, and re-establishing Royal Orchid from a rate-driven rather than volume strategy. And as we go across some of our smaller assets, Metropole and Brindavan, again, we're pivoting to rate as we refurbish Metropole. And in one market, we did suffer in North Goa. It's very public actually in the papers. If you read, North Goa was actually really suffering as a micro market, and it did affect us year on year in Q2. But that being said, that was largely a one-off period due to weather.
Yeah, sure. And your recent case with SAT stay, can you share the eventual liability on the company and promoters in this case?
Yeah, as far as the SEBI is concerned, let me tell you, Mr. Patel, that the initial order, if you look at of SEBI, there were twofold. One was the accounting treatment, and the second was that allegation against the promoter that they have sold shares under some insider thing and all. But we are glad to inform that the SEBI, the final order has come wherein they have, they have removed all the allegations against the promoter sale of shares. That has been dropped. But they are stuck to the accounting treatment. Okay. So there was a, levy of penalty on 3 of the management as well as the company. We have gone to SAT and we have filed an appeal, and we got a stay from the SAT on that. And presently we are contesting it in SAT.
Yeah, okay. And the ARR are higher in JLO. However, managed hotels has seen a drop in ARR versus Q1. What is driving this?
No, see, managed hotel, as I have explained earlier, that whenever a hotel is open, so like 20 hotels we would have opened in last 1 year. So any hotel, it takes 6 months time to catch up on the occupancy as well as the ARRs. So initially, these numbers what we give is the average numbers. So, but the existing hotel have definitely done well than last year. But it's just the new hotel what we have added, they need to catch up in 6 months' time.
Okay, sir. Okay, sir. Got it.
Thanks, Piyush. We'll take the next question from the line of Rahul Bangadia. Rahul, you can go ahead, please.
Thank you for taking my question, sir. First of all, besides the 3 crore number that is mentioned in the notes to accounts, is there any other one-off that you have put in the other income, sir? In this
No, the other are general thing. There's no one out there. It continues to be there every quarter.
So only that 3 CR number is a
Yes,
one-off,
yes,
right?
yes. It's a one time. Yes, yes.
That is the one. The other question I had, sir, is that, you know, the leisure side of the revenue has come down this quarter, year on year,
Rain.
both ways.
Rain.
And I understand that from the previous answer that a lot of it has to do with the weather part of it.
Yes.
The managed hotel revenue has also come down Y on Y. So, you know, a big part of the leisure and the managed, there is an overlap there. Is that what we should understand?
Yes, yes.
That's actually true. A vast number of our leisure hotels are managed, and the additions in the last 18 months or so have predominantly been in the managed space and in the leisure space. Hotels, you know, Mr. Jaiswal is, you know, as a CFO, he's aggressive and says it takes 6 months for a hotel to stabilize. But I can tell you with utmost certainty that if you open a hotel, it takes a minimum of 12 months for the market to even recognize its existence. You know, so we've heard comments about for the last couple of quarters we've made statements, but the reality is that it does take 3 to 4 quarters for any form of decision that a management makes to actually materialize at the end. So
so to add to Mr. Arjun Baji's statement, Rahul, I would like to say that, see, the hard work what we have done in last 2-3 years by adding so many hotels, we will reap the benefit of this in next 15 years, you know. So that's how we are planning the way forward.
No, but just to add to Mr. Kataria's question that he asked just a while back, is that when do we actually see this in the quarter? You know, we recognize that you have worked hard to build and to reach the place where we have, but when do we actually see this in the numbers? Because quarter on quarter, year on year,
Yes.
we just see flat.
But it's not quarter. The reality is that this is say a 2-quarter phenomenon, and you know that Q1 is the lowest in the hotel business. Q2 is slightly higher. Q3 is higher than that, and Q4 is kind of the best, right? This is the cyclical nature of our industry. Now, these openings will start showing results from Q4 predominantly. Is when you'll really start seeing things move up. A lot of our effort, right? And if you look at some of the numbers, right? We're among the highest return on capital employed in the industry. We have robust EPS among the highest out there. Now, all of this stuff, you know, has been done with a conscious effort to say, how do we deploy capital to yield you, the investor, the best return on your investment, right? And yes, it has to reflect in share price at some point, but it will start when results, you'll see these, like with Mumbai coming on and a bunch of other revenue shares that we've signed coming on stream, right, towards the end of this year. I mean, we only see, you know, huge positivity going forward.
Yeah. I see. Actually, as investors, we don't focus. We obviously stock price is one of the factors, but we essentially try and see when does the company start reporting better numbers, because stock price is just a reflection of that. It is nothing more than that, frankly speaking. So we are, you know, that is why the questions around the performance rather than stock price will take care of itself as and when the performance kind of on the reported numbers improves. So stock price is just a byproduct there. Just the last question here, sir. What is the status on the Surat project?
All right, on Surat, we currently have 188 rooms in. It's a 288 key property. The owner, it's a managed property. We're currently it's called Surat the World, managed by Royal Orchid. We won't be rebranding until such time as the asset is completely finished. Now, the asset itself is a beautiful asset. We're we've opened the restaurant. It's obviously Surat, so it doesn't have a bar. We've opened a deli. We've finished a gaming room. They're currently building a spa. They're currently building a gymnasium. We've signed 2 large contracts that have given us a base income, and we're currently managing through banqueting spaces adjacent to the building. The building's sitting next to 40,000 square meters of lawn areas. So we're currently working with wedding business and wedding planners. It's ahead of the game, to be frank. The Surat property is the furthest away from the current CBD, but it's closest to the new speed train that will go BKC to Surat. It's the closest one. It'll be 2.4 kilometers, and it's the closest to the significant build of the diamond bourse, the bourse that's been built in Surat. And again, that's been built ahead of time. So over the next 18 months, the owner will complete the rooms, and the product will be one asset that will be seen to be ahead of its time. And without going into it, there's a couple of large accounts that are talking to us that are currently with other brands. And again, the asset itself is 1 and 2 bedroom long stay apartments. So it's a lovely asset. It'll take time to gestate. It's a very big building. It's the largest inventory in not in Surat, in Gujarat. And by key space, it's one of the largest hotels in the northwest of India. So it'll take time, but it's certainly doing some really good numbers, and we're starting to see some business flowing in.
Okay. In the middle, the video got stuck a bit. So sorry if you have mentioned by when do you expect the full property to be operational on this?
No. So, Rahulji, I think this, as Mr. Logan was saying, it's a deliberate attempt, right, at phasing the opening of the hotel to keep it in line with the increase in the business that is coming into the property. You know, it's a 288 key property, right? And we started with 96. We've doubled that over the last 6 months to 188, and we will get to the 288 keys. I would say in about 12 months from now, right? Along with each one of the room opening, the room blocks, I guess, room floors opening, a couple of new facilities are added to it. And that is done with a very deliberate strategy so that the owner is not overburdened. See, listen, we're a management contract, right? At the core of it all, the guy who will end up losing with such a large hotel, right, with heightened costs and all of that stuff is the owner. And we have to be extremely mindful, right, of our responsibility to the owner's profitability as well. Okay, so hence it's a 12-month cycle. From now to 12 months, every quarter something new is added, and we're very happy to see that every quarter the hotel performs significantly better than it did the last quarter. Right?
And what it will do, it will reposition the hotel business in Surat. So I think we've signed an excellent contract. We've got a good owner. It's a beautiful asset. And over the period of the next 12, 18 months, will turn, the flower will bud and really look amazing. And I got to say to you that when that speed train opens, it'll be seen to be a genius signing and a genius build that someone's built so close. The city in Hyderabad of 2006, when someone built in HICC and Financial District, was seen to be crazy, and Tank Bund was the heart of town and road number 1. 20 years later, Financial District is the heart of finance and heart of business and hotels in Hyderabad. So this is another one of those where you've got something built ahead of its time. We've got to manage professionally and also manage in line with the market and bring it on. So those things we're working on, and it's a phased process.
So thank you for answering my question. Thank you.
Thanks, Rahul. We'll take the next question from Chirag Singhal. Chirag, you can go ahead, please.
Yeah, thanks for the opportunity. Firstly, I wanted to know what were the expenses that were relating to the two leased hotels that are coming up, one in Gurgaon and one in Mumbai. How much expenses were incurred during the quarter? And in the next 1-2 quarters, if you can just give a number as to what kind of expenses will come in the P&L, which are attributed to those two hotels.
See, Chirag, there is no expense which has hit the P&L in the second quarter for these two projects. Please understand what we have done in Mumbai. We have given a refundable deposit. Okay, we are not spending the money. It's on lease, so we are not spending the money as such. So we have given only a 40 crore refundable deposit, which was given in the first quarter itself. Okay. Now, as far as the Gurgaon is concerned, again, we have given around 61 lakhs of deposit. Another, I think, 30 lakhs further we have to pay once the hotel is ready for operation. And apart from that, in Gurgaon, we might have to, still we have not done anything. We might have to do some working capital or some, some loose furniture, fittings and all those stuff.
Yeah, I was asking more from the context of I think couple of con calls back you mentioned that you need to hire some employees before. Yeah, so
Yeah, so from a project management perspective, and of course, with a hotel like Mumbai, right? If you have to open in March of next year, we need to start top level management already is on board and they're coming on board by the end of this year. There is a cost to them. January onwards, you'd have a full-fledged team on board, right? If we have to open in March, right? So those are our costs, right? That we will be incurring. But again,
second quarter, nothing is there.
Nothing. It's Q3 onwards that costs are being incurred in this asset in Mumbai. In New Delhi or Gurgaon, no costs on our balance sheet have been incurred so far.
So in Q3 and Q4, can you give like a tentative number, like what kind of cost we should be expecting, which will be attributed to these hotels?
See, as far as the cost is concerned, there will not be any operating cost as such, because the operating cost will start only when the hotel starts its operations. Okay. So we are looking at sometime in the end of, end of the financial, maybe in March, the Bombay one may start. So some cost will be there. Monthly cost will be around 3 crores. So in March, maybe 1.5 crore we might have to spend. But Gurgaon is going to start in April, so this year nothing will come.
Oh, okay. I'll get back in the queue for any further questions. Thanks.
Thanks, Chirag. We'll take the next question from Sanika Khemani in line from chat. Sanika, you can unmute and ask your question, please. Sanika, you can unmute and ask your question. Okay, I will ask on her behalf. Can you please tell us what are your guidance for FY26 and FY27?
FY26 and FY27. FY26, like earlier we had said, we will be touching somewhere around 500 crores of the top line. And FY27, another addition of some 20% might be there. It is very difficult to say for 27 right now, but 26 definitely we will be touching around 500 crores of the top line.
Thank you. We'll take the next question from Ria S. Ria, you can please ask your question.
Good afternoon. Thank you for the opportunity. So you have mentioned the renovation cost is rupees 1.28 crores in quarter two. Is this done or is there more to go? And how much more can be expected in the second half? What is the level of renovation now pending?
See, in the second half also, we will find roughly around 3 to 4 crores of costs which may go into the renovation expenses, roughly.
And so what is the level of renovation now pending and in which hotels, since this also impacts the occupancy rates and ARRs?
Yeah, so see what we have done in our flagship hotel renovation was going on. That is about to complete now. Maybe in a week's time it will be over for the areas what we have taken. And then there will be some small renovation will be there in our resort also.
Yeah, but here also, we have done 24 rooms have been completed. Another 28 rooms will be taken up a little later because it's only now the season. So probably in March, we'll take up the balance. Then I'll complete 2 floors, about 54 rooms or so will get completed, and they have come out very well, received very well by the market. So our ARR should shoot up. That about 25% of this hotel will be brand new. And we are adding 28 rooms in the resort, which has existing inventory of 54 rooms. 28 rooms. These are wooden cottages, very nicely upmarket wooden cottages. And as the thing got delayed because of rains, so work could not go on. But now work has picked up, and we hope that in the next quarter they should be commissioned, and we should start getting revenues from there because inventory is small and there's a pent up demand in that particular area. So we should get more income out of that. Like from Metropole now, we already renovated a part of it, and the balance renovation will only be taken up in March, April. But we are definitely, the errors are moving up there. And of course, while the work was being done, there was a loss of revenue, but that is inevitable.
Yes, sir. So I also wanted to know what's your current number of hotels and keys across all hotels, and how would this be divided into JLO and managed hotels?
Yeah. So we have given a breakup in the slide. If you look at it, that slide one. In our investor presentation, we have given a breakup in slide number 15. In slide number 15, there is a breakup of owned, leased, JV, managed, and total. So owned is 398 keys, leased is 688, joint venture is 193 keys, and managed and franchise is 5,277 keys, adding up to 6,556 keys total.
Okay, sir. So also, when we see last year's September 23 presentation, you had totally 6,898 rooms and plans to add 1,250 keys. That would have brought us to 8,148 keys. Against this, we have reached 8,223 keys. From here, we are guiding for additional 2,100 keys. Can we safely assume we will achieve this target as well?
Yeah, we will be crossing this 8,223 is including that. See, 8,223 what we have given in our slide in the presentation. Okay, that is in slide 11 we have given. That is including this 2,100, 1,600 upcoming hotels. Keys.
Yes, so you have achieved the target. Want to know how to look at next 12 months?
You see, projects do get delayed, and we are pretty much following up on all these 21 upcoming hotels. And we had hoped that within this financial year, they will get operational. But the chances are that a few of them will get, pushed into the first half of the next year. But the story doesn't end here because we are getting very aggressive in terms of onboarding some of the existing properties and reflagging them. We're working toward that also. So if we get some properties, then that would not take too long for it to be converted. So I think that will also come in. So certain projects which have got delayed, but we hope to get certain projects conversions. So pretty much we may hit this target, 8,000 plus rooms.
Yes, sir. Thank you. All the best.
Thank you.
Thanks, Ria. We'll take the next question from the line of Harsh Parekh. Harsh, you can unmute and go ahead, please.
Thank you. Sir, we see in the balance sheet that the parent company charges consultancy from its wholly owned subsidiary. Can you tell us what is this? What is this on account of?
That is, from the, no, we have this wholly owned subsidiary associated hotel where we have parked all our management fees, management, managed hotels. From there, we charge a cost to them and we transfer it to the standalone.
Okay, sir. And sir, what will be the capex for the Gurgaon hotel, and what is the share of Royal Orchid in the same?
Gurgaon hotel capex will be around 5 crores, not more than that. And the second question was yours?
It's a revenue share.
Yeah.
It's not a share. So we will own 100% of the revenue, and we will give the
Right.
landlord a fixed rent on the asset when completed.
Okay, sir. And sir, any plans to enter into the service apartments business and any other JLO hotel plans similar to Surat and Mumbai?
See, we are, of course, service apartment like our business in Gurgaon is actually serviced apartments partly, and some are rooms. And even Surat are a large number of they are serviced apartments. But our experience has been that nowadays with Zomato and all the food deliveries coming in, people are not cooking in their apartments. They're just using usually the microwave to heat what they get from outside. So I think for long term, yes, people are looking at service department because of short supply of daily help and workers. They are looking at service department. So as and when the opportunity comes, we will get into that also.
Okay, sir, got it. And sir, one last follow-up question. So this subsidiary for managed hotels, will the company look to unlock value in this management hotel company?
Well, too early to say right now, but we'll be once we are stabilizing all our operations, which we are aggressively doing right now, we look at that option also.
All right, sir, and all the best.
Thanks, Harsh. Anybody who wishes to ask a question can raise hand or can post the question in the chat box. I think since there are no further questions, I will. Okay, so Chirag has a follow-up question. You can please go ahead.
So I had a question on renovation expenses. So in managed contracts, who incurs the cost towards renovation?
The owner incurred.
Okay, so there is no, like, we don't have, it's not on us to incur any renovation.
No.
Chirag, wherever we own the PNL, we incur cost. Wherever we earn a commission, the owner incurs the cost. That simple.
So this 10 to 15 odd crores of renovation expense per year, you are incurring close to 2.5 crores. For the next half, you're suggesting 4 crores. So let's take 8-9 crores for the full year renovation expense. Is this something that one needs to consider every year, or this was like a one-off for this year?
No, Chirag, as you know, right from before the COVID and then 3 years, we didn't spend any money in this. So that is why this figure is looking big in the current. We started from last year, October onward. So that is why I don't think so. Running hotels, you have to incur this kind of cost every year. It has not happened in the past. From last year we started, because now if you have to be in the business for next 4-5 years, every 4-5 years you need to do some expenses. No, so that is coming now. Otherwise, see, like in our flagship, once it is done, we will not touch it for next 7-8 years. So like that it happens.
So, like, can you give me some idea as to what, like, whether or not there will be any renovation expense for next year, which is FY25? And if yes, then how much should we be accounting?
FY25, there is no any kind of significant expense.
I meant FY26. Sorry, next year.
FY26, there will not be any significant expenses as such.
Okay.
Maybe one hotel, Brindavan Garden is there, which we are supposed to do, which we have not done. Some part, maybe 1 crore or so, or 2 crores, it may come next for the entire financial year. Nothing any
We are
major will come.
evaluating all that. See, these are things, some of the things which some of our own hotels we're looking at that, okay, example, we've taken over the Royal Orchid Central in Bangalore. So right now the hotel is doing very well. So on the need basis, we will decide what to do. And we'll do it in phases. It's not that we're going to shut down the hotel and renovate the whole place. So we'll take it floor by floor. And that as and when the need arises, we'll do that. And we'll keep you informed quarter to quarter. We can't tell you right now that, okay, this next year we'll spend this much. If there's a need, we'll spend it.
Okay. Oh, thank you.
Thank you, Chirag. We'll take the next question from the line of Rishit Shah. Rishit, you can go ahead.
Yes, good evening, sir, and thanks for the opportunity. Two questions. So, firstly, basically, we have been kind of talking about renovations, and we are also highlighting the cost that we are incurring. So, due to the renovations and also due to the favorable demand supply dynamics that we see in the industry, and as is being commented by most of the players, do we see an ARR increase, or what kind of ARR increase do we see shaping up in the next maybe couple of quarters or in the next year?
See, overall, I feel that the revenue should go up by next year by 15% of the existing hotels. And of course, we are adding the new hotel, Bombay, that'll give us bump up. So I think that should happen in the next year because there will be an increase in, you see, the benefit of this renovation will come in the next, next year. Next year, from April onwards, the benefit of this renovation will come. Beneficial expansion will come. And also that bump up of the new property, that'll also come. So that's why we are looking very optimistic about the company board. But we are not taking very, very, aggressive risks in doing our properties because, we don't want to take loans from the bank and then do all this work. Most of the renovation is being done through internally generated resources. And I think things are looking quite well.
Right, sir. And follow up on that, a large part of this 15% like for like growth will come from the growth in ARR because occupancy is almost like near optimal levels, right?
No,
It's a combination, right? You need ARR, occupancy, and F&B and other income growth per hotel. So I think it has to be a combination of everything. It's not just ARR 15% up. So you've got to slice and dice it across the board.
When you renovate, when you lift your product, you're necessarily able to identify a different market, which allows you to get a higher capture rate, which allows you to get a higher capture rate in food and beverage because the person who pays more has more disposable income to spend more. So there's a natural flow on. And as you build out your business, as you renovate, your reputation grows, your public channel grows, and then it starts to self-perpetuate. So there's a whole, it sits right across.
Understood. Thanks for that. And secondly, I missed one of the earlier questions. So the 1600 rooms that we are expecting to add, can you highlight the timeline for this?
Predominantly, most of those rooms should be on stream by the end of this financial year. We have 3 openings coming up in the next month or so, and there are 6 hotels that would get pushed into the term between April and that Q1 of next year. So we've got out of the 21 hotels, we're really looking at 16 to open over the next 4 to 5 months.
Okay, understood. Thank you. Thank you so much.
Anyone else wishes to ask a question?
Hi, since there are no further questions, we'll request the management to give their closing comments.
Well, thank you very much for joining us in this call and asking us all your doubts and questions, which we will be very happy to do that. We have, over the period of last 1 year, on advice of Vinay, improved our, made much more disclosures in our presentation, and we are a very transparent company. We'll continue to do that. And we hope that we are beefing up our directors team also. We have a new independent director who joined us with vast experience in the Taj Group of hotels. So he's also joined us. We hope that, because side by side improving the product, we need to improve our team also. So that is, we are well aware of that. We have got a very senior training manager we have appointed. So we are working towards everything to make this company into one of the companies to be reckoned with in the near future. We have also introduced a loyalty program. Earlier we had a loyalty program. It's not that we didn't have a loyalty program, but we did have a loyalty program, but which was really manual. So there were a lot of errors and delays in redemption of points and all that. So now today we have got about 3.5 lakh members in the loyalty program, and it's likely to grow further. And once you have a loyalty program, you get a lot of repeat customers. Like when you go out, to go to an airline, we used to always go to Jet Airways earlier because they used to give us loyalty points, and Indigo will not give us loyalty points. Of course, unfortunately, we lost all that, and with Kingfisher also. But we are hoping, because we are amongst the bigger chain, amongst in our mid-market space, we are the ones which got the best loyalty program. And so if we get a customer from a loyalty program as against a customer from an OTA, like Make My Trip and all that, our cost of customer acquisition comes down. So I think we're working on that. It's started doing very well. And if there are any hitches, we're going to iron it out. And then it's always been aggressively marketed by all our hotels. So we hope that this will become an income generator for the company, as well as create a lot of loyalty. And there are a lot of new schemes. See, what happens is when you introduce something new or you open a new hotel, you already have a list of X number of who you send mailers to. Now, if we get hundreds and thousands of mailers and WhatsApp, and we don't have a look at it, but if we receive a mailer as a loyalty member, we'll definitely have a look at it, because we know that there will be something for us in that. So the eyeballs are there for internal promotion of loyalty programs. I think we are working towards all the things which are required to make this company a stable, a great company. We're not taking undue risks at this moment, because, as I said, that sometimes there are uncertainties in the world. So the wars are there. Sometimes, as I said, there are uncertainty within the country. There was this floods, and which affected the hill business as well as the beach areas business. So we are going with little caution, but at the same time, we are not being foolishly aggressive, but we are definitely, pushing everybody to grow our business. Thank you.
Thank you, sir. And thank you to all the participants for joining on this call. And thank you to the management team for giving us their valuable time. This brings us to the end of today's conference call. Thank you.
Thank you.
Thank you.